2017 was an extremely active year for hurricanes, with Harvey, Maria, and Irma causing widespread devastation. It was also the most expensive year for natural disasters in the U.S., with total damage exceeding $300 billion. Although they generate some new activity by way of preparation and recovery, natural disasters cause a net loss of wealth. Last year, consumer spending saw a slight uptick in fuel, groceries, and home expenses before the hurricanes, but spending on services like healthcare dropped dramatically the week of landfall and remained depressed for weeks after the storm.
Certain regions and industries may be more prone to damage from hurricanes, like oil and gas companies in the Gulf. But as we saw last year in Houston and California, there are no guarantees, even in areas rarely hit by natural disasters. No matter where a business is located, they may be impacted by more than just property damage or lost inventory. Employees are a company's biggest vulnerability, and they can be the hardest hit due to infrastructure breakdowns, home damage, or loss of key service locations like banks and grocery stores.
From an economic standpoint, there's a big difference between the goods sector and the services sector. For services, the lost opportunity cost from natural disasters can never be recouped. Businesses can just hope to return to where they were. In the goods sector, businesses can compensate for lost time. Since broad economic indicators account for both goods and services, the effects of storms aren't always visible, even when they're devastating to communities. Ultimately, the faster communities and businesses can get back on their feet, the less everyone will suffer from missed economic opportunity.
Recovering from a natural disaster starts with having a contingency plan before it strikes. Businesses should ask themselves questions like, have we formed an emergency management team? And do we have a thorough understanding of our insurance coverage for disaster recovery? Having a backup office location is only helpful if it's fully operational and tested. Does the location have an alternate power source and backup supplies? Additionally, business interruptions can be caused by anything from illnesses to cyber attacks to protests. And having a contingency plan is something organizations should consider all the time, not just at the height of hurricane season.